Hey traders, what's going on? Jamie Saettele here. It is November 15th, 2017, and let me know that you can hear me and see the chart. Got a chart of the Nikkei up here right now, but actually we're not going to look at that first. We're going to do what we usually do. Hey Thomas, what's going on, man? He says AV isn't good. All right, great. So first thing we are going to do here is look at the dollar index, like we often do. So this has worked out really well as far as the timing on kind of when to, go neutral or even bullish on the dollar. And this can be mostly euro, but because as we've seen, it has not been a so-called dollar market, right? It's been anything but. We've had big declines in commodity currencies recently. Euro is, over the last couple of months is sideways and just picked up. Pound hasn't done anything for 2 months. Dollar yen, down recently, but more or less range bound, and you get the idea. So this is saying to me, and we've had this for a while now, right? Going back to the 1994 top is what this is compared to. This is saying that we have entered that period when, it is really time to adopt maybe a dollar bearish, general dollar bearish theme again, but especially as it relates to euro, right? And it's not just it's not just this analog that suggests that. We also have seasonal tendencies here. Right? Those start to turn down really after this week, around, say, in the next 2 weeks is when we start to turn down, and really the rest of the year is historically, on balance, kind of a bearish period, right, for the dollar. Dollar does tend to go, weak into the end of the year on a historical basis. So, it's one thing to have, the analog. It's another thing to have the seasonalities. It's another thing entirely to have both of them saying kind of the same thing. So this is especially true as it relates to euro, as I've mentioned. So, kind of wind at your back is the way I look at the seasonals, and we've come into levels and responded, in euro and in dollar. So if we just go back to that, we'll go to a euro chart real quick. Or sorry, a dollar chart. This is the US dollar FXCM one. And we still continue, remember this this median line, after the head and shoulders break, consolidating now. I'm sure for both, bulls and bears, it probably has been a bit frustrating, right? Because this is back on 10/26, and here we are on 11/15. And really we've gone nowhere. So, I'm of the mind that it is lower in dollar here. That's where the trade is, in my opinion. Again, it's not just buy euro and forget it. You got to pick your spots, okay? And that's what we're trying to do, with euro in that 1730, 1740 area, and we'll look at that in a sec. Let's go to the DAX though real quickly, because as volatility is starting to pick up, we are seeing, this relationship, right, with DAX and euro, really start to come into play. And we started talking about this right after we topped, which I guess would have been a week, 8 days ago or so, last Friday in the DAX. So, all right, hold on. put in euro in here. Okay. It's actually better, I guess. It'd probably be better if I put in dollar euro, so it's a little more similar. There you go. So you can see here, not a secret, they are moving quite closely, right? And that is a function of higher volatility. It's a function of, you know, kind of capital flows and speculation, you know, really starting to take over on euro. So it's nice when this happens because you get kind of confirmation from a you know, multiple markets, right? So if you're looking to buy euro, which we are, then it's nice to have the levels in the DAX, right? You know, front and center. So regarding the DAX, if I go to a daily chart, average here is the 20-day, right? For the most part, it's been pretty good. You know, last couple months was great support back on 10.25, and I'd be looking for that to provide resistance probably at this point. You know, over the next week or so, tough to obviously give it a time, but you know, looking for a bounce from here and failure, right? I had thought that we might have had 5 waves down here, and we were going to go ABC. Was not the case. Does look like we got another, you know, kind of another move off of here. So maybe the 5 waves was not complete. Maybe it's more like 1, 2. This is all 3, 4, 5, right? So back into here would put you in the area of the former 4th wave. Call it, you know, 13,100 to 13,160. You know, kind of this congestion range up here is where I would be expecting failure in the DAX. All right, and as we've had the DAX rally off of the low from this morning, you've obviously seen the euro come off from 1860s, big congestion area up there, and we are currently trading really actually unchanged on the day. I'm looking at euro right now, and it's completely unchanged. Not up, not down. So here's euro. And my bias, my trade idea, what have you, remains the same right here, and that is to get on the long side. And the place to do it, I do think, is probably the best place to do it. Is probably going to be that 1730 region, right? Got the order of 1740 right now. You know, could be moved to 1730 or a few ticks above 1730 going into tomorrow, because really what you're doing is you're looking at this trend line and probably even connected a little more from this high September 8th to this high 26th, and it's going to cut just a few ticks lower, right? But you've had, you know, you can kind of see the generally speaking, 1730, it's been a pretty decent floor, you know, since August, you know, that first pullback, and we traded well below it, obviously, but look at how many wicks there are down below that 1730 area, right? So you get all kinds of wicks down below 1730, and you're closing above it or right at 1730 really throughout much of August, and then you get the final push up into the highs. Same thing happened back in September, late September, early October, right? 1730, good support, wicks below it, closing right above it. The only day really you closed below 1730 was 10.5, and then of course you had support on 10.18 and 10.23 at 1730 and 17.24. So 1730, you know, bottom line, seems to be a pretty big spot, or a good spot, I should say, for you know, for support in euro. Okay. And, you know, again, going back to, I had the chart up here with RSI in last night's post. RSI can tell you a lot, and in this case, just from a real simple understanding, if you will, of RSI, what we've got is the indicator finding support near 40, right? Yes, we did trade down. I guess it was closer to 36. But the whole point being is that we haven't gone oversold. And that's a big point. That's a big point. All right, that's an important thing to note. At its core, successful trading, I think, is it's trying to go with the general trend. Easier said than done, obviously, but trying to go with the general trend and giving yourself a good entry, which is the best risk management possible, because you have tight risk at that point. Well, in this case, if we identify the general trend is up based on the fact that the market's been going up, based on the fact that the dip here, from September has found support on the indicator around 40, that is the hallmark of a bullish profile, right? A bullish momentum profile, right? I think Mike likes to say momentum profile or RSI profile or what have you, but that's very useful to know, just that simple thing. So this says on the daily chart that buying dips is a valid proposition, and I think that the place to do it is that 1730. So, this being what I think is a larger fourth wave, right? The 1, 2, big 3 up, 4, as noted with the Kiwi last night, obviously a very different situation, but the character of fourth waves are usually quite tricky. So my gut would say, despite the analog, despite the seasonality, I would not assume that it's just straight up from here in euro, right? That would be great. Get long, wake up in a week, and you're at 124, 125, which is where I do think the next target's going to be. There's a couple reasons for that, but one is that 1618 of proposed wave 4 is 24.25. I think you could be up there by the end of December, but there's a lot of time between now and the end of December. So, we could go something like this could be the A, this could be a B, we could trade higher in B and then pull back. You could do a lot. You could go triangle, whatever, okay? Point being is that you want to be buying and then I think trading out of some up into 1946. I know I originally had the target on half up at 1875 or something, but given the extent of the push and what we're getting now, it might be better to actually change that to 1940s, which is, again, the gap from 9/22, which was the day before the election, right, in Germany, Merkel. If you remember, that's really when the decline started to accelerate to the downside in euro. All right, so there we have euro, right? Pretty simple stuff. We want to buy 1730. I'm using yesterday's low as a stop. It's just, to me, it's kind of a simple breakout. Risk point. I mean, you shouldn't go below there if we're going higher. Okay, if we do, then probably wrong on the euro upside stuff. All right. What about the dollar yen exchange rate? The short. I guess you're not supposed to be short dollar yen during U.S. hours or stock markets for that matter, because they do tend to find good support early and often. But the hourly, what I'm looking at here, first of all, is there any reason to suspect that the low we just made this morning is important? Well, if you go 2 legs down, you actually have 1226. We haven't made that yet. You don't have to, but I still think that first area is the 1180s. Okay, and maybe closer to 111 at this point. we're going to look at a few different charts here. Let's actually start with the Nikkei. Okay. So we're going to step out and so weekly chart of the Nikkei. Back to 1989, you dropped from close to 40,000 down to 7,000. That was in 2009, okay? Well, at this point, we've retraced, forget all the possible structure or form, but we've retraced 50% of that decline. In fact, on a weekly closing basis, it's almost, a daily closing basis, it's very close to exactly 50%. The closing high is 22,922, and that would be 20 points from a 50% retracement, you know, to the T, okay? Pretty good place to stop, right? 22,751 is also the 1996 high. So that high was taken out. The channel that we'd be looking at based on here from the 2009 low and the 2012 low would put you actually a little higher. So one possibility is that this is a 1, 2, 3, and that we're going to be into a 4, okay, from here. Now, if that's happening, it's probably going to be pretty damn messy, and or at least I would suspect that it's going to be pretty damn messy, and it's going to consume a great amount of time, because if that, you know, proposed wave 2 here took really, you know, if you say it started here, May, you know, to August, it took 3 months, over 3 months. All right. So that is a possibility that you actually go into everything from here is a 4th. I'd expect that, you know, it takes a good deal of time, and support might be down here near 20,830, which is obviously not quite 2,000 points away. Okay. But this is all speculation. Why don't we hone down into the near-term picture and see if we can find where we might actually want to, you know, put on something more aggressive as it pertains to a Japanese short position, whether that's being short dollar yen or short the Nikkei. Well, that looks like a pretty good trend line right there, doesn't it? Two touch points. The third was support. Almost hit it from the underside. Okay, not quite, but almost. So that might be something to pay attention to. And then, of course, this to me is not, you know, definitive in any sort of form, but that's okay. I'd be just simply looking at this line up here as something that provides resistance, and that doesn't have to be anytime soon. It could be, you know, you could come off again and then get a huge rally up into it at a later date. So all I'm saying is that's a level that I would be paying attention to. Now, look what happened here this morning. Look what we took out. We took out the last day of October low. So essentially this entire blowout move, right, has been retraced. So no wonder we're getting a bounce. Right, we retraced everything that started this month. So round trip, 2,000 points round trip. Okay, so that brings us to dollar yen. Don't really have, for me, on the near term, not a lot of clarity on dollar yen here. Again, bigger picture, I do think that you know, it's probably some sort of an important top up here. Obviously, the day the reversal, which was 11.9, that's a day that you're going to want to look at. On the close, 22,640 as well, because that was the massive volume in the Nikkei. Okay. Now let's go back to dollar yen. Okay, here's our bigger picture chart that we've kind of liked so much. You do have, again, this is the 11, this is almost 112, call it 111.80 to 112 at this point. I guess it would have been too easy to actually hit that, but nothing's changed as far as where we've come from. We've come from massive resistance, and I actually tweeted last night on a public Twitter, but you know, the COT, the speculative position in Japanese yen is extraordinary on the upside right now. Okay, I mean, bulls just, you know, on Japanese yen or dollar yen, Japanese yen bears, people are loaded on the long side right now on dollar yen. And when we've seen that kind of positioning, what it means is there's a lot of you know, there's a lot of pain, possible pain that you could get. So the pain trade to me is on the downside in dollar yen, which is why, yes, I will respect my target down here at 111.80, but I would also, you know, let's see on the near term. This, by the way, is just based off of this. That's all it is. Okay, so we've hit kind of the first channel here. And if I go to a 60-minute chart, you can see why I'm looking at this level in particular right now as we speak. Kind of want to see resistance here. And it's pretty clear why, I think. 60-minute chart, you know, here, support, that was yesterday, was that yesterday? Yeah, that was yesterday morning. And then resistance just last night, around midnight my time. And now we're right back at it. So there's that. If we don't stop here, then, you know, at that point, pretty clouded for me, but you've got two levels, 43. Okay, 1143. Let's see if we can throw a parallel on there. Probably be a little bit lower to go off of these levels. Something like that, potentially. So it'd just be something to observe, but really I wouldn't want to see us, you know, if I'm sitting here speaking, I wouldn't want to see us too much below or too much above this magenta parallel, because it's kind of where we really started to break down from last night. All right. So we'll see. It's a work in progress. You know, stops tightened, 1390s. So at minimum, we'll be booking a small gain here. But let's see how the day plays out. U.S. session obviously is something else entirely than Europe and Japan, because, or Asia generally, because you know, I mean, it's literally risk off during, it has been for the last 7 days. The markets have fallen during Asia and during Europe, and then the U.S. opens, and it's like people are tripping over themselves to buy stocks. So, you know, reminds me a lot of 2013. So that's my story in dollar yen and Nikkei. I'd like to see us, you know, see some resistance here, turn over, and, you know, then we'll kind of go from there. But as it is, 1180 is still the spot where I'd look to take profit and maybe look for a bigger bounce, with potential, I guess, for something deeper. Because if we throw up the fib from you're looking at 50% is 111. 111 was resistance. Oops, I didn't mean to do that. 111 was resistance back in August and then in September before we broke out. So it's kind of where I'm looking. All right, let's look at Euro Yen next, because that might actually help identify what is possible here with maybe with dollar yen or yen crosses generally. So the daily chart, something we can't forget. The level up here is insane. Okay. 618 of the 2014-2016 decline. Okay, we've hit it twice. Are we going back for a third time on this? To me, this is still very toppy, despite my bullishness, if you will, in euro. So maybe I'm wrong there. I don't know. I do like the level I like to set up on euro, but maybe this also means that dollar yen is a little more bearish than we think. Okay, than even I think. Maybe we have 110.15 in us. Maybe because that would be the 618 of the rally from the September low. If we look at euro yen here, if I go to the 240-minute chart, impulse down, A, B, C potentially. It does look like you do need another push higher, right? If we look at this from a very short-term basis, looks like a 1, 2, 1, 2, 3, 4, 5. In other words, you need 5 waves up from here, 31.51, before you'd even consider, a sell here. Okay. So again, work in progress, not extremely clean to me just yet, but it's getting there, right? I would say that you probably need another push higher, a dip, and maybe even another push higher, and maybe you go for the so-called triple top. Technicians will say there's no such thing as a triple top, but that's not true, especially when you have resistance where we do, which is the 618 of the drop from 2014. Okay, so it looks like we're getting a mini response here. See, there you go. Nice little chart line there, isn't it? 5 minute. Okay. What about dollar CAD? Been really quiet. The only idea I've had with dollar CAD here lately has been to trade essentially 127 and 128, probably 35 now, right? Would probably be where you'd want to go rather than 20. 20 is the 618. You'd rather have the intersection with the slope lines, and you can see all the pivots that occur around these slope lines, right? This is all this is the center of the channel based on the trend line from September and October. Okay, so we're taking this line here, center line, and that's it. So that's where I think that you're going to see some resistance in dollar CAD. Call it more like 28.35 at this point, okay? And frustrating a bit, right? We had the order at 127 to buy it and to target this area up here, and that was it Monday? No, it was yesterday. It was yesterday that target, or that was put in. The low was 127. It's actually 126.999 or something, but that was on the bid. So the ask, of course, is where we buy it, and we did not get that that treatment. We did not get bought or filled on that buy. So unfortunately, it missed by about a tick, pip or so. That's all right. From here, I would just say that no, I think that 128.35 is going to be resistance in dollar CAD, or at least it should be if we're going to try, if we have turned over. All right, now if we have not, right, which is also possible, if we have not turned over and we are actually going to make another run, then there's still, don't forget, there's still this 200-day average up here, which is now 129.90, and you still would have two equal legs up at 29.69, and that's also still the January 31st low at 29.67. So, you know, be aware that if we do end up going through, you know, to new highs, that doesn't, at least for me, that does not mean that, you know, this is all of a sudden dollar CAD's going to the moon. Rather, it would tell me that there might actually be a better short opportunity, right, as everyone gets wiped out up here. And, you know, I'm always thinking of what could go, what could change, right? So what's happened over the last year, most of the last year, you've had crude and crude oil and dollar CAD, which previously had been joined at the hip, right? Like for many years, and there's times when the correlations have gone out of favor, you know, certainly. But I can't recall, at least in my career, I can't recall a period when it's been this pronounced, right? When we've really, you know, things have really gone, you know, divergent to this manner. And if we take, let's bring up a comparison chart of crude and dollar CAD. I think this is maybe a story that, you know, trying to get early on different stories, right? This might be one that we want to look at and maybe, you know, consider. So we'll put, actually, let's do it again. Let's do CAD dollar, right? And we'll compare that with crude oil. Okay. So you can see early in the year, you have some, you know, trade together. Then they really don't as crude goes on, you know, its dump into June. And that's kind of similar to what I think just happened, actually, because crude went completely one way back in June. Dollar CAD was going higher, right? Well, dollar CAD's been going lower since September, or sorry, not dollar CAD, CAD dollar. So we would say that, you know, dollar CAD's been going higher, yet crude has also been going higher. So notice the divergence. So if we're, you know, going to possibly get maybe a bigger push in dollar CAD up to the close to that 130 to test that 200-day average, right? If that's going to happen, and, you know, maybe it does, then maybe that's coincident with crude oil sinking down to that 51, 52 area, as per our chart last night, right? Maybe they're back in line, actually. Maybe we see Canadian dollar and crude weakness throughout, you know, much of the rest of this year, right? That's something to consider. The crude chart to me is much cleaner. Look where we reversed, right? We got the 2008, 2013 trend line parallel that goes back and touches, you know, April 2010, June 2012, and literally top ticked that on 11/8, right? So to me, the reversal from where we reversed, right? If you're just looking at horizontal charts, it seemingly is out of nowhere. I think that there's a possibility that we do trade down into this well-defined support zone, which again would really be 50.90 to 51.90. You can see going back to October 2015, you got a high there. You got highs there throughout 2016. You've got support there early this year, actually, right? And then really that's when we took off, this big breakout bar on 1027, okay? So if we can get down there at some point, whether it's, you know, late this month or beginning of December or late December, somewhere on one of these on trend lines, you know, that could set the stage for the next Canadian dollar rally and the next crude rally, right? And of course, we have our analog, which has served us pretty well as far as looking for pivots and turns within the crude oil market over the last couple of years. Details from this on this post, right? These are back, I provided them back on, I think it was, at least the most recent iteration of it was back last Thursday in that post. So what you've got is just an overlay of the price action from 1990, and you know, there's a lot of similarities in the time series as far as when you get turns. So what this means for us right now is that we're at a period where crude oil is vulnerable, you know, maybe for the next 3 to 4 weeks, and then you'd want to start to look higher again in crude. So again, it's all kind of coming together, I think, with the crude market, and as that pertains to the Canadian dollar, you know, 28.35 might have a scalp there, right? You trade off of it, but I'd still be aware of the potential for something bigger, right? Maybe a final run on the 200-day average, and then everyone gives up, and then you go short dollar CAD, right? Okay, so there's that. What about Kiwi and Aussie? Okay, so Aussie's in the dumps right now. Let's look at Kiwi first. Okay, first chart, bigger picture chart, right? Pay attention to from here, from 920, clearly a 1, 2, 3. In other words, I think everything from the low, specifically from 1027, because you remember this this right here, this 11.1 bar, that little spike down was, I think that was employment data on for New Zealand, not for the U.S. I think it was employment data for New Zealand. They had a quick spike and then the market ripped. It was like, you know, as usual, right around the close in U.S. markets, and not too thin or not too liquid at that point. So again, this is a new spike down here. So I'm really treating the real low as 1027. I think that everything from that point is probably a triangle, just because this is a fourth wave, and fourth waves are usually a bit more complex than what we have here, right? So remember, daily reversal resistance and daily reversal support, take the high day of the move and put a bar on the close. That's 68.45. Sorry, 69.45. That's why I have it here. And if you were to go alternate legs of, you know, this is proposed wave A, proposed wave B, assuming yesterday's low stays in place, which we don't know if that's going to happen, but assuming it does, proposed wave C puts us, you know, up near 68.45. So I was kind of hoping we'd get there today, like during the U.S. session. I don't know if that's going to happen, because this is when you'd have the exact intersection between this former support line, right? So always like to have a confluence between levels, whether it's horizontal and slope, or in this case, two horizontals and a slope, because you got a fib relationship, daily reversal resistance, and this trend line. That to me would be a short. So you'd be looking at A, B, C, probably a move down in D, E, and then you know, Kiwi dollar can fall through the floor. So that is my working assumption on the New Zealand dollar. Okay. And you could be looking at a target as low as 66.50. That would be the expansion target from here, with 67.20 or so being probably where I'd want to get out, because that would be not just the 1618 expansion of this level, but also it's also the 61.8 of the entire rally, right, from 2015 to this year. So that's 67.20, pretty close to, you can see the May 2016 low, and then you've got some congestion over there before you had the final lows back in 2015. So no change for me so far, despite this morning's reversal. I still think that, you know, it's worth leaving an order at that 940 area. With the understanding that it's a fourth wave, and you know, fourth waves usually are not just one leg up. It's usually a bunch of legs sideways, right, or even a flat. But that is my working assumption. Okay, Aussie. Aussie is getting burned here, and we are not clearly not going to hold this blue line. So kind of thinking that it's a flat A, B, C. If that's wrong, I'd still think that you get a bounce off of somewhere off the support line. So let's see actually where we would get a confluence between parallels back here. Okay. So what we want to do is we're going to throw it off this one here, right? Well, that would be pretty darn low. I suppose it is something to actually be aware of. Not as clean as I was hoping for, right? Really, the cleaner one is probably this one, but that would mean that you're not going to hold this level either. So yeah, I don't know. I think there is I know there's Aussie employment tonight. I don't have, you know, much of a desire to trade Aussie right here. It's clearly, you're clearly breaking down, and I think this is a fourth wave, right? Remember, we had 1, 2, 3, 4, 5. Let's throw a couple measurements on there though and see what areas there could be for, you know, capitulation. So if this is 1, 2, 3, 5 would equal 1 through 3 at 75.05. Okay, that's a level to know. And the fourth wave expansion is 75.20. So I would put 75.05, 75.20 as the most likely spot for any sort of reaction in the Australian dollar. Okay. Yeah, 75.05, 75.20 is the most likely place for any sort of reaction in the US dollar. Or sorry, in the Australian dollar. All right. That really is all I really had to go through today. You know, my biggest focus right now is on euro here, and so we're getting a pretty good pullback you know, from an area that is pretty well defined resistance, but you know, you can see that clearly. Took out the 10-20 high, pulling back, but I think that, you know, I do think once 117.30 is gonna try to hold. Otherwise, I wouldn't be buying it. So with that, we've got some time. Are there questions that people want to go through? Oh, before I do that, why don't we look at the S&P real quick? Because the S&P, well, in the U.S. stock market in general, stacks. Okay, here we go. Thomas asking about gold. We'll look at that. Here's the S&P. This is the S&P 500. We did hit a pretty big level today. We went a little bit below it, but you can see that it's the close from this day of 10:25. That was a high volume day. That was the last time we kind of had a capitulation low. So you can see S&P 500, we've hit that spot. And if I zoom on into a shorter term chart, you can see this 4-hour bar is insanely bullish looking, right on support. So my guess is that we're probably going to try to trade higher from here. It's also very close to 2 equal legs, right? Boom, boom, boom. So see how the day finishes, but so far holding support. So that's, to me, that's a major level. We're looking at here, this is a fork. It's actually arithmetic scale, but this is a fork back to January of 2016. If I do it log scale, you still have some stuff there. It's just a little different, but so still supported in the S&P. It's kind of been my thinking for the last couple of weeks. After we saw the DAX reverse like it did, right, was my thinking that you'd actually see a new DAX, a new S&P high that's not confirmed by the DAX. In other words, you'd have the DAX, you know, correct up 3 waves after an impulse down at the same, you know, but the S&P would be up here, and you'd have a massive divergence between global markets, right? Because previously they had been running together, and obviously right now they are, you know, they're not. So dip, new high, at the same time DAX makes a lower high, and that to me would be your warning shot, if you will, or warning sign that that all is not well and that we might actually have a top for real. And I'll leave it there on the S&P. All right, so asking about gold. And Pooja wants to look at the dollar Indian rupee. We'll do that. I know we have not looked at that in a long time, but I'm happy to do that. I love looking at different things, markets that I haven't looked at in a long time. So let's take a quick look here. Might as well take a look at gold and silver, actually. Oh, and then I forgot. I had the Wall Street Journal up for a reason. Okay. Here's another reason to think that today's move is probably capitulation-like in nature. All right, we're gonna go to commodities charts here. You know what? Before we do this, before I look at gold and silver, I want to share this as something we've been trading for a bit. So do you see this chart? This is HYG, and HYG is the high yield debt, high yield corporate bond ETF. Okay. Well, we noticed a pattern looked damn similar to what happened in 2011 up until 2013, right? So we are in puts on this, and we are probably at or near a point at which we should start to bottom out and consolidate. Not just because it's tanked, you know, to the manner that it has, and we've come into a decent support area, right? Here is the chart with nothing on it. You can see here, kind of in the area of lows back from March, right? But here's the front page of the journal. Investors dump telecom bonds. Well, 25% of HYG are telecom bonds, okay? And if you go to the business finance section, it's essentially an ode to how, you know, shitty the junk bond market's been. So, yeah, I'd say that, you know, everybody is well aware that HYG has now fallen, so look for HYG to rally. And if we overlay the S&P with HYG, all of this in HYG gave you this, right? Nothing. Very little. 1, 2, 3, 4, 5, 6, 6-day pullback. So here's another thing to watch in the stock market. Watch for HYG to make itself a, you know, little counter trend move here on the upside. While at the same time, you get the new high, final push in the S&P, and then everyone will say, yeah, see, the HYG and the high yield bond thing didn't matter. Well, it didn't matter until it mattered, and it matters now. All right. So that's another thing I think is going on. So capitulation low today, as per the sentiment extremes denoted by the journal in HYG, probably gives you another reason to think that you actually get a bit of a move higher in the S&P, right, from here. So there's another thought, right? So as I say all this, we might want to review what the hell we're doing with dollar yen. Might want to think about getting out. I don't know. I said let the day settle. Don't want to make an intraday trading decision that I didn't plan on making the day before. I'll let you know during the post later. Okay, back to gold and silver. So gold, silver, pretty much in trading hell right now. And you know, if you're a gold bull, you're like, what the hell? If you're a gold bear, you're probably like, what the hell? This, I have zero clarity on this. Zero. I don't know if it wants to try to make another run. I thought when we bottomed here, that would have been the perfect spot to make a low and go higher. In October, we did, and then we traded up for, you know, 2 weeks, and since then, it's just been a complete disaster. One thing that I will say is that it's so dirty and so messy and so unclear that once clarity does come, should be an opportunity for a great trade, because the market will be so coiled and so many people will have been thrown off of the bus that, you know, there should be an opportunity to do some exciting things. You know, on a breakout basis is what I'm trying to get at. So wave structure, I don't see a whole lot really here, to be honest with you. I mean, what is this? You know, this is the most impulsive thing of the lot, but it's not. This is actually the most impulsive thing, and this is corrective as hell. You know, the GLD market again still looks cleaner to me, but it can't get out of the damn, get over this median line, right? It's like what happened back here. Here's what I will say. In a bull market in gold, you typically have silver versus gold going higher. You also typically have GDX versus gold going higher, and we don't have that right now. GDX versus gold hasn't been doing a damn thing. In fact, GDX divided by gold has been languishing. It's below its 200-day average. It might want to trade out a little lower and go test the lows down here. If we look at GDX itself, this is the gold miners ETF, right? You can see how you've traded and failed under and near the 200-day average. So to me, I just don't have a very strong conviction at all on the metals right here. Right, the one that I do like on a longer term basis is silver, because of the analog and the comparison with back in 2001. The suggestion being, yeah, Pooja, buy a 3-month strangle in gold. Probably not a bad idea, right? Because you're going to get a breakout one way or the other. But this silver analog does suggest that we're bottoming and that it's time to go higher. We also did have a gold analog suggesting that, oh, I don't have it on here, I have it over here. So this is week that starts now, looking for a low. 200-week average is just below the market, 1250. That may be a place to know. And then ultimately the gold, the real gold seasonals, gold used to be seasonally bullish starting now, but the last 5 years have kind of pushed it back, and we haven't had really good gold trading on the upside starting until mid to late December. So I wish I had, Thomas, I wish I had a better answer for you. Sometimes, though, the best opinion is none, and there's just not a lot of clarity right now in the gold market. When I see it, I'll write about it. I think that, gun to my head, I'd say that gold and silver probably are trying to find some sort of a low, right? But my gut also says that you might need to have a final dump in gold and silver, as often happens, right? We see, how many times have we seen a so-called fat finger trade in gold, a fat finger trade in the metals, and that ends up being the low. So that's what I'm kind of worried about, I guess. All right. Dollar rupee. Got to look at that one, and then yes. Yeah, Thomas says I think a dump in the middle of December. So yeah, it might be the spot. It might be. Kelly, I love your comments, man. You're the best. All right, hold on here. Let's take a look at. We want to look at the rupee. Okay, so this is, I had something drawn here. Looks like we had a breakdown, and it would appear that one of the targets we were looking at was here, because that would have been the extension, right? Hold on, give me a sec here. All right, so that was a nice little pullback off of that region. You've got pretty good resistance up here. Might want to try it again. But let me see if there's anything on a broader slope basis, trend line basis that we can look at. Well, this is pretty key right here. Do you see how, you see that, so this is just, we're going back and we're doing 2008, 2011 trend line, right? It's actually kind of similar to the Mexican peso in a way. But do you see this parallel right here? So this would be a 75 parallel. Do you see the resistance here? Resistance here, yes, it was not here, okay, although it actually did ride along here for a little bit. And then it was great support back in 2014, in May 2014, right? The dollar went into orbit at that point. And now, you know, we're kind of trading around it, right? So it's really been consolidating and trading around it on this angle. When I combine that with the fact that you have the horizontal levels here that are, you know, April 2016 lows, you've got lows from September, November 2016, this is the election, of course, right here, this big bar. That to me, you know, I would lean trading-wise on selling into here, right? You kind of have a double top, the breakdown, come back and retest the double top, or the base of the double top, right? That's how I would look at this. You know, from a trading standpoint. From an analysis or forecasting standpoint, I'm really not too sure. You know, it's still a major uptrend, but understanding, you know, the double top, the angle which continues to act, and understanding that you had old support here and that you've come into it and you know, kind of failing on it. You failed back in September. I'd be more likely to trade on the short side into this resistance, right? I'd look for, say, like daily reversals, key reversal days, just like this, right? I'd look for that. Look for daily, you know, key reversal days, and I'd look on the short side in this in the dollar against the rupee. Okay, all right, so I'm going to wrap it up there. Thank you all very much for attending. Always appreciate your time. And yeah, we will do it again next week as always. All right, so everyone have a great rest of your week. Interesting times here. Obviously, we've got a lot going on in our world, looking for, you know, kind of maybe Euro buy here soon. Do like Kiwi on the short side, triangle, dollar CAD range. You know, we'll see. 28.35 might get a trade off there, but I wouldn't get married to it. Might get that push into the 200-day average because of crude, and that link might be back in more volatile conditions. Dollar yen, we'll manage it after the day is over. I want to see what happens the rest of the day. Don't forget, we're still at resistance here. I'll leave you with that chart because it's so pretty. Okay, here you go. Ding, 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 ding. Go lower now. All right? Okay. Everyone, thank you again. Take care. Bye.